I call to order the February 2026 meeting of the Audit and Compliance Committee of the University of Minnesota Board of Regents. Good afternoon, everyone. You can sit closer.
I'm going to have to leave early.
Oh, okay.
Sorry.
Just because your name tag was there doesn't mean you have to sit at the end of the table. Thank you to everyone joining us in the Campus View room. While today's meeting is not being live streamed, the recording will be uploaded and archived on the board's YouTube channel after today's meeting. I'd like to welcome our student representative today, Danielle Herrera from the Rochester campus, who's joining us virtually. We also have Regent Gully joining us virtually. The first item of business this afternoon is to review the audit work completed since the December 2025 meeting and discuss the university's fiscal year 2026 audit plan. Here to provide the update are Controller Molly Viola, and from the university's appointed independent external auditor, Clifton Larson Allen, LLP, Principal Jean Bouchon, Principal Daniel Persad, Manager Michael Anderson, and Manager Michael Catrisi. I hope I was close on at least those three names. Controller Viola, would you like to start?
Sure, thank you, Chair Verhalen and members of the committee. It's a pleasure to be here again this afternoon with our team from Clifton Larson Allen. They're going to share some results in regards to some of the engagements that they've wrapped up since they were last year in December related to fiscal year 25. And then they're going to roll into the audit plan for fiscal year 26. I think it's just a unique call out to say that that's just kind of how we roll with the audit process. We wrap up one year and we dive right into the next. So I'll head over to Jean Bouchon, our principal from Clifton Larson Allen.
Thank you, Molly, and thank you, Chair Verhalen and the rest of the committee. Molly said it perfectly. We're going to talk a little bit today about wrapping up the FY25 audit procedures and then dive into the planning for FY26. I am Jean Bouchon. I am the engagement principal, and I work with higher education institutions across the country, and it's certainly a pleasure to be here with you today. We'll start off the conversation with Jake and I walking you through the results of the FY25 single audit. That is the audit the university receives over $1 billion in federal funding each year. The Office of Management and Budget outlines a set of pretty strict procedures we have to do to test compliance over those dollars. So we'll walk you through the results of those. And then we'll dive into the FY26. It's time to start planning for the FY26 set of engagements that we do for the university. And so Mike and myself will walk you through the planning process and your role in the planning for FY26. So let's dive into part one, the results of the FY25 single audit and some other engagements we also perform for you. So we met with you guys in December and we talked about the results of the financial statement audit, right? So today we're going to talk to you about the results of 3 other engagements we performed for the university. The first one is that single audit, that federal compliance audit I just described. Secondly, we are also asked by the state of Minnesota to do some procedures over some state funding over financial aid. We do an examination procedure over each campus's spending of that financial aid. Okay, so those first 2 engagements that I just described, we do issue what we refer to as full level of assurance, where we're issuing an opinion or an examination report saying, we believe that you are in compliance with XYZ. We'll walk you through those results in just a bit. This last engagement that we do is called the NCAA Agreed Upon Procedures. It's a little bit different. It's limited assurance. Essentially, the NCAA says, hey, all Division I schools, each and every year, you have to have these procedures done over your statement of revenues and expenses. They lay out those procedures. We do the procedures. Please understand it's not an audit, though. We simply report the results of the procedures the NCAA asked us to perform. All right, so that is a summary of those engagements. And so what I'd like to do now is turn it over to Jake to kind of walk us through the results of each of those engagements.
Thank you so much, Jean. What you're seeing here in front of you is what we deem to be our major programs tested. So, these are the 4 major programs as part of our single audit report that we had our various procedures on this year. If you were here for last year's call or have reviewed last year's single audit reports, the first 2 are pretty consistent. So the research and development cluster and the student financial aid cluster. So really the reason that these will continue to be tested is just the sheer magnitude of the programs, knowing how much they represent of what's ultimately showing up on your schedule of federal expenditures. And the other two programs, 3 and 4 there, really, to use a little bit of jargon here, type A threshold. So when you look at the single audit report, the schedule of findings and question costs, it lists what that threshold is. And really any program on your CFA above that threshold, so it's about 3.9 million, is something that if it has not been audited in the last 3 fiscal years, it's something that we're required to look into. There's a few qualitative considerations, but if we just think kind of sheer dollars, that's the reason why those are kind of the new ones that we cycle in and out. Overall, the results of that single audit. So the first opinion as part of our single audit report is more so on your financial statements as a whole. So although we have no material weaknesses or deficiencies to note, things that could show up if there were ever any sort of material audit adjustments that relate back to more so the financial statement audit. But again, nothing to report here, so a very clean opinion. The second one is more so, again, the single audit report. So this is compliance over those 4 programs that we had just previously talked about. So this is the compliance on those 4 programs. Again, we have an unmodified opinion, which is the highest level of assurance we're able to provide. We had one significant deficiency. And the next slide will go into a bit of detail of what that is. But big picture, what does that mean for the university? It still means you qualify as a low-risk auditee. So if I was to kind of distill down, hey, we have one finding, how is that going to impact the programs? Does it impact, really what is it getting at? But given the magnitude of the program, which again, we'll go into depth on the next slide, didn't result in any sort of, raised red flags that would ultimately show up on your report. And that is one thing that if you do look at the single audit report itself, there is a parameter that says, does the university qualify as a low risk auditee? So you'll see again, that is checked as a yes. Last thing is the schedule of expenditures of federal awards. So again, this ultimately drives, what it is we need to be testing. So this schedule itself is something that is in the report, and it details out all those various funds that were spent during the year. Great. So I wanted to just briefly, without getting too far in the weeds, but again, happy to take those types of questions. But the finding relates to COD reporting, so common origination and disbursement. And really the point of what COD is, it relates to student financial aid. And it looks at the reporting and reconciliation of student disbursement detail on an individual basis. So the compliance is that anytime a disbursement is made, the school is required to submit to COD the timing. So, on this date, this amount was dispersed to the student, and it's supposed to be done within 15 days of the disbursement. 2020, beginning of fiscal 25, so the fall of 24, pretty tumultuous year from the Department of Education perspective, a lot going on, largely with the FAFSA. So there's a lot of administrative things going on both at that level and kind of how that trickles down to the university. So in the single audit report, you'll see the finding there that describes ultimately what I'm describing to you of what the finding is. But then in the cause section, it kind of puts into perspective, why this happened. And again, happy to kind of dig into that a little bit deeper, but just big picture, one disbursement out of 40. So again, we do a sample basis when we do our single audit reports. We had a late disbursement. So again, no funds improperly dispersed, no question costs is the term you'll see in the report. So nothing, a red flag in that regard of, hey, why are you doing this? It's just kind of a timing mechanism. So again, because it was a reporting matter, it ultimately falls into significant deficiency. So really there's 2 types of findings. There's a significant deficiency and a material weakness. So a material weakness is something that could potentially make you not a low-risk auditee. And really the material weakness, as you see the definition there, a reasonable possibility of a material instance of noncompliance. So because we're able to identify that ultimately no funds were dispersed improperly, this was kind of an isolated incident because of kind of all the administrative burden of some of the FAFSA issues that kind of clogged some of this reporting. And ultimately, again, it's not a question cost. We led to the point where we deemed it to be a significant deficiency. So again, it's something that is required to be reported to you all in the report. But, truthfully, you might not have had a finding in the last few audits, but I think it's good to see in a report. Truthfully, just because when the Department of Education is reviewing these things, they like to see that it's not something that's being rubber stamped. Not that we would ever do that, but I think it points out that there's always things that can be improved on, just knowing there's quite a bit of compliance areas and things you need to look out for. Lastly, just want to hit on a few of the other engagements. Jean alluded to these in the beginning there. So the state examination. So this works a lot like the student financial aid in that it's just a different type of aid students are getting, not from a federal perspective, but more on the state side. So in the last meeting that we were just chatting about was the North Star aid. So that's something that we look at. We do an individual report on each campus, consistent with what was done last year. The Rochester campus, again, as a reminder, pulls into the Twin Cities, so there's only going to be 4 reports. Ultimately, no findings were identified, but again, we looked at not only the awarding to students as well as the disbursement and the internal controls to administer that program. Lastly, we want to chat a bit about the NCAA agreed upon procedures. Last year, we actually had 2 reports, the Twin City and Duluth campus. So depending on what division you're in, so Twin Cities being Division 1, that's something that's required annually. Whereas the Duluth one is something that, because they're Division 2, it's every 3 years. So you'll see next year's audit, these will cycle through as far as which campuses require this type of report. But ultimately, again, no exceptions noted, nothing to discuss. And before we get into the fiscal 26 planning, I'd love to turn it over to Chair Verhalen if you had any questions or the members of the committee.
Thank you very much. I really did just want to take a minute to discuss the significant deficiency. Like any good program established by accountants or engineers, like you immediately go to names that sound really, really dramatic. So the significant deficiency, it is something that is, it's important enough to merit attention. So that's why you're reporting it to us. For the governing body. But it's less than a material deficiency. And just to be clear, this is a situation of reporting information back into the Pell Grant system when those funds are dispersed. From either the time they're dispersed, you have 15 days, or November 30th, whichever's first. And of your sample set of 40, one of those students was not reported back. So it's not like they didn't receive their funds. It's just that the disbursement made to that student was not reported into the system. Am I understanding all that?
100%, yeah.
Yeah, so one thing I'll note too is this individual student, so it's 15 days of the original disbursement or notification of any sort of like errors or corrections. So maybe I'll clean that up just a tad. So with all the things going on at the federal government, they send error records back. So they say, hey, these handful of students or whoever that may be, we need you to resubmit this because we've noticed X, Y, Z. So just the amount of error records, truthfully, in kind of this time frame relative to other times of the year were just quite large. So you'll see that in the report as well as in the corrective action plan that management is required to submit. So it's just the matter of you could essentially keep submitting an error as long as you do it within 15 days. Just keep trying to fix that. So this individual student, it was reported, and then that error wasn't corrected inside that 15-day window. So again, kind of the distinguishing between significant deficiency and material weakness. We didn't think this was a pervasive issue where, hey, you don't have the people in place to get this right. It was just kind of the perfect storm of kind of that time of year and kind of all the data and errors needing to be corrected. This one just fell through the cracks.
Thank you. Regent Hips.
So that seems like it would be like a very minor discrepancy, not a major criteria. I mean, so what would be considered minor if this is like a major, like you guys are falling off the earth here?
Chair Verhalen, Regent Hips, I would thank you for asking that question. In fact, we had a great conversation with management on that exact type of question. And the standards are very strict. If you have one exception under the federal guidelines, we have to report it. We don't have any leeway. Unlike the financial statement audit, where we do have some leeway, we don't in the federal audit. And so that's why it's at that very lowest level. I think the last thing that I would add, if I were sitting in your shoes, this is not something I would be concerned about.
Okay, I'm not concerned about it, but
Yeah.
I mean, when I have a significant deficiency in my checkbook, I'm in real trouble.
Completely agree.
This is not significant. It's all-
Completely agree.
Okay,
And you should be
thank you.
asking me like, should we be concerned? And the answer is no. Yeah.
So, yeah, go ahead.
Yes, Provost.
Just to drill in a little further, you put it in the context of the changes in FAFSA, which of course ended the apple cart for everybody that fall, created all kinds of chaos. Do you, from have a comparative basis to suggest, how we look in that regard relative to other institutions.
For sure. Chair Verhaelen, Regent Ritter, this is one of the most common reportable findings that we report with schools across the nation. I'll say this one last thing. You guys haven't had any findings for the last several years, which I think speaks to great kudos to your department. I often tell management and other team members that I once had a CFO that at a higher education institution says, if you don't find something in student financial aid, you're not doing your job. Just simply because there are so many different compliance requirements. But no, this is a very reportable item that we're seeing across the country.
Yeah, Chief Auditor Goldsman.
Yeah, thank you, Chair Verhaelen. So just to follow up a little bit on Provost Ritter's question, I have a second question as well. Have you seen an uptick this year, in particular, in the number of reporting timing deficiencies, just given some of the delays and changes from the federal government
Do you mean across?
other
everything?
schools, from other schools?
And Chair Verhaelen, members of the committee, I would say that we're still issuing this report for many of our schools. We're still doing these reports. If you recall, and maybe we should mention this, the compliance supplement that guides our testing this year from the federal government was delayed. It did not come out until late November. So the fact that we're making this meeting, I think is a huge hurrah, So for many of our schools, we're still completing this testing. I would say there has been a slight uptick, from the general sense of the ones that I have seen. I think my colleagues would agree. Yeah.
You're thinking about the information system issues.
Yeah.
Oh, yes.
And the timing of the
timing.
federal report.
Yeah.
And then one follow-up.
Please.
Thank you, Chair Verhaelen. So could you talk a little bit more about the NCAA agreed upon procedures and just the timing in which you do those? And specifically, I'm thinking about the Duluth campus where we do have some Division I programs and Division II. So how do they get treated when you're scheduling that?
Yeah, for sure. So, Chair Verhaelen, members of the committee, I would say that if you're overall a Division II, you're treated as a Division II. Even if you have a Division I sport, you're treated as a Division II school. And so those are once every 3 years. We did do those guys last year, I do believe. And so that's how they're treated. Does that answer your question?
Yeah, I just want to make sure the committee is aware of that
Yes.
we can treat them as Division II,
Yes.
even though there are some of their sports that are Division.
100%. In fact, I have a school client that has a Division I hockey program, but they're Division III, so they never have the procedures. So, yeah.
Any other questions for CLA? Thank you very much for your time. We really appreciate it.
We have part 2 of the.
Oh, yeah, that's right.
Oh, yeah.
I thought you were maybe switching folks
Yeah,
around, so
yeah.
yes, please.
Well, we'll just dive right into FY26. How does that sound?
Yes.
All
I love
right.
it.
Okay, so we are starting the planning process for our fiscal 2026 audit and engagements. This slide highlights the engagements. Just as a quick reminder, I don't think I need to go through the last 4. We just talked about those, but that's that single audit, the state aid, the NCAA agreed upon procedures. But I will say that 4th one there is agreed upon procedures that we do once every other year. That's the regenerative medicine agreed upon procedures report. The university receives some money, state allocations for regenerative medicine research. And so the state does require some of those limited procedures over that funding. So you'll hear us report on that for FY26. The one at the top is our big guy, right? That's that financial statement audit. That is where we give assurance to the readers of your financial statements, whether they can rely on that information, if that information is fairly stated. And so the next couple of slides, we're really going to focus a lot on that financial statement audit for FY26. In this planning meeting, we always like to remind governance, management, and ourselves that we each have an important role in the planning and the execution of the financial statement audit. Management, of course, is responsible for preparing those financial statements. Our job is going to be build a risk-based audit to determine, are your financial statements free from material error? Whether that material error is due to fraud, whether that material error is due to error, or that material misstatement is due to non-compliance. We're going to build our audit around those 3 buckets of risk. Keep a couple of things in mind. Keep in mind that our audit, our opinion is going to give what we call reasonable assurance. Okay, and that's not just CLA, that is how the audit standards read, essentially telling you we're not auditing every dollar. If we were auditing every dollar, we'd live here, right? And so it's given the readers reasonable assurance that your financial statements are free from that material misstatement. We also like to remind you guys at this meeting, please don't look at us as part of your internal control structure. That's the job of management. I think we're all aware of that they're responsible for building those internal controls to prevent, detect material non-compliance, error, and fraud. We always like to, during this planning meeting, remind everybody your responsibilities as governance. I know you know that, but that's oversight of this process, right? We are required to report to you in 4 different instances in accordance with the auditing standards. Our planning, that's today. We're going to meet that element. Part of the risk assessment, we're going to schedule our interview with the chair to make sure that we get your input on what do you see as financial statement risk at the institution, right? So we're going to hear from governance on that risk input. The last piece is that exit interview. We'll meet with you in December and go over required communications. And if you're counting correctly, you heard me, I said there's 4. That 4th is an if. And when and if we were to identify instances of material fraud or material illegal acts, we're required not to wait till December, right? We're required to engage with you as soon as some of that information is solidified. Hopefully, we're not talking to you in that 4th bucket, right? And so those, as members of governance, you can expect those lines of communication. Of course, it doesn't have to stay there. If you ever want a conversation with us, we're always open and willing to engage. So with that, now I'm going to turn over to Mike to go through some more of the logistics of our planning.
Thanks, Jean. Chair Verhalen, members of the committee. This slide really visualizes what we've kind of been talking about, right? We closed one door in fiscal 25, and then we immediately opened another door to fiscal 26. So I think as you look at this, you can really see that this isn't a one time in the fall, we come on campus, we do some work, and then we report in December and February. We're in communication with management throughout the year. And we found that's the most successful way of doing an audit, because the most efficient way to address any issues, any changes within an organization is to do it real time as it comes up. So that's why you'll see here, we have touch points throughout the year to complete our different phases. What I'll say is our major time on campus is typically in the summer, doing student financial aid testing, doing our preliminary audit procedures, planning, risk assessment, understanding really what are the big changes for fiscal 26. And then in August, September, and October, that is the core of our field work for the financial statement audit. You'll see sprinkled in here for the other engagements that are smaller in scope and smaller in time consumption as it relates to what it takes to complete those procedures. Those are sprinkled kind of intentionally around that August, September, October timeframe to make sure we're meeting all the deadlines, but we're also managing compression and the asks of management, because ultimately the audit process isn't what you're hiring people to do at the university. It's an and we try to make sure we're respecting that, and we're developing an audit plan to make sure that time is being respected. So as Jean had mentioned, there is a risk assessment process because we're performing an audit based on risks. We're focusing our time and energy on those riskiest areas, those areas that a reader of the financial statements are most interested in. Revenue, assets that may easily be misappropriated, investments, things of that nature. So we develop our audit plan where we look at specific accounts, we look at specific transaction cycles that include those types of risks throughout the year. We gain understanding of those internal controls, because if we see a potential deficiency in internal control, we're going to develop an audit approach to address any of those gaps we may see. I'll provide the context that hasn't been our experience in working with the university, that we don't see those deficiencies as far as it relates to financial reporting. So we develop an audit plan that focuses on actually testing some of those controls to alleviate some of those required sampling procedures in the fall. What I do want to focus on in this slide that Jean had alluded to is we ultimately do report to this group as governance. So we will schedule individual conversations with Chair Verhalen throughout the process. We also work with different levels of management to have those similar discussions surrounding fraud. Not because we're suspecting there is any, but really it's part of the audit plan. And we also want to make sure, one, is there a discussion that needs to be had with this group if it's pervasive enough? Or two, are those financial statements accurately representing what may be present within the university? This isn't the time or the format to have these types of one-on-one discussions. But what I will say is because we report directly to you, there is a bi-directional line of communication that's always open. So we are always available if something comes up, whether it's just questions or specific concerns. We are here to have those conversations. So we may be in front of you twice formally each year, but we are available throughout the year to this group as well. So now to the specific accounting pieces. It seems like every single year something changes, right? So we have two things that are changing this year. GASB 103, and it's all sequential. So we are finally into the triple digits of edits to the financial report. This one is a little bit bigger, and this one really drives from the regulators at GASB, the Governmental Accounting Standards Setting Board. The last major reporting update they did was in 1999. So they said 25 years feels about right. Let's start making some more edits. So they really focus on 6 buckets in governmental reporting that are now updated. What I'll say is for the university, there's probably 3 that are most impacted, and really 1 that'll take the most time. If you think about the report of your financial state, the report of the financial statements, in the beginning is a management discussion analysis. So it's really management's ability to provide a little bit of color commentary of the financial statements follow US GAAP, but here's a little bit more context that you can take in reading and understanding these statements. A lot of institutions over the past 25 years have turned into a regurgitation of what the statements say without actually providing appropriate context. So the standard is saying, hey, we're going to provide you a little more guidance in what you really should be saying. So that MD&A for fiscal 26 is going to look a little bit different. It's probably going to have a little bit more insight, and that'll take some time for management to revamp that in accordance with the standard. Another, I'd say it's the second most impactful, as I think about higher education, is this concept of subsidies. So now I'll call it the income statement. You have operating revenue, you have operating costs, and then historically you just had non-operating items. Well, now this new standard is saying, well, let's actually break out this concept of subsidies. So if you think about higher education, particularly public institutions, your tuition is artificially reduced by state appropriations. So you're able to keep the students' cost to attend the institution lower because of these state appropriations. Those are now being required to be presented separately as subsidies to provide a reader a little more context to say, okay, you may have an operating loss each year, but here's why, because you specifically have state appropriations funding that difference. Or in theory, that's the way it should work out, right? In a perfect world, you have a balanced budget where that number would be 0. Certainly that doesn't happen every single year, but that's kind of the concept behind that new revision. And then the third that will impact the university is just a simple presentation of component units, where historically you could have aggregated them in one single column on the face of the statements. The requirement now says if it's not, if it doesn't inhibit your ability to read the financial statements, you have to show it into separate columns for each entity. So think about physicians and the foundation for the university. And then the second standard that goes into effect this year is much less of an undertaking. This simply requires, because in the past few years we had new financial statement line items as a result of GASB 87 for lease accounting and GASB 96 for subscription-based information technology arrangements, capital asset footnotes now have to show those separately where there wasn't a specific requirement to do so. So now as you think about a capital asset footnote where you say, here's our land, buildings, equipment, now it specifically says, what are your information technology agreements you capitalized and what are your leased assets that you capitalized? And then the implementation guide, it is kind of ironic that I'm talking about GASB 103 coming into effect this year, and in the same year that this implementation guide is coming into effect. An implementation guide is basically an addendum where where GASB issued a statement and they got so many questions from University of Minnesota's other schools, that they maybe didn't think about in the initial standards, so they had to clarify it. So you'll see here, I just talked about subsidies. They already had to clarify, well, what exactly is a subsidy? So this is kind of an add-on to what you're already doing, and then just some clarification. So nothing significant there, but just a couple of key pieces there that they'll just refine some of the guidance. So similar to the single audit results, this is our plan for the fiscal 26 audit. It probably started a couple weeks ago, but we're going to keep going. And then, the end for the financial statement audit is in October, and the game plan is to be in front of you again in December.
Thank you. First of all, thank you for taking the time in the presentation to represent each of the campuses.
Oh, you
It's noticed. So thank you. Regent Hicks.
Thank you. First one is it GASB 2 or GASB 3? What was the first one?
103?
103?
103. Okay, so like they're going to compare state support now. Well, and it's going to, so that.
Are we going to wind you up here, Doug?
Just a little bit, because like I'll just go to Texas, okay? They got all these land leases and they've got this huge foundation. And so their legislature gives, like Texas A&M or University of Texas, very little. And so so our legislature can sit there and say, oh, by the way, we give you more than Texas does. Well, what about the, $20 billion in their foundation from their oil rights and their land leases? So I think we got to really watch out for that, because that's going to hurt us in the long run. And the second one, I do agree with the second one on the leases. I think that there's a lot of capital leases that are really debt, but they get around the debt and then they call it a lease. But you know who else is good at that is state legislators, but they don't do that. They lease buildings every day from counties because they don't have the capital funding to do that. So I'm kind of jumping on I don't like state government bandwagon here today. I'm sorry about that. But I mean, it's like any kind of ammunition, this is reverse ammunition for us that we can give to fight to get more money out of our legislature we need. And this is going to go the other way. And I think it's going to be like they're going to try to, I can see what they're trying to do is compare what the state support is, but can you give me some more background on why they're doing that? I mean,
Yeah.
am I missing something here or what?
You go first, then I'll.
Yeah.
Chair Halen, members of the committee. So we do currently include some line items on our financial statements that call out the sort of funding that we receive from the state. It will be presented differently once we get through our analysis. What I'll also share is that throughout the next couple of months, our accounting services team will continue to kind of evaluate what the impacts of these new standards are, and we'll be able to have probably a little bit better understanding in regards to what it is specifically for us. Jean may be able to share a little bit in regards to what she's seen across the industry, though.
And Chair Verhalen, members of the committee, I think what I'll say is a couple of things. First of all, let's utilize that management discussion and analysis. That is a tool that can be utilized to tell your story, right? To a certain point, you have to still meet the accounting standards and what it says you can, but that could be one tool. I think another comment is state appropriations have always been presented on your financial statements. And so it won't be new. It will be where it's placed, okay? And what it's referred to. And so that information's always been available, but I maybe lean back. And what we'll be doing to assist management during this process is this is new for everybody, right? So we'll be working with institutions across the country to identify best practices. How are people telling their story with this new change? So we'll make sure that we're working with management in that implementation for sure.
Follow up. I think that's really important so that we can compare apples to apples. So I would love to know where all these states are in context, right? As long as we can make a fair comparison.
100%.
So thank you for that.
Of course.
Thank you for the explanation as
Of
well.
course.
Great. Regent Farnsworth.
Thank you. Thank you, Chair Verhalen. I think, my question's actually also about the state, but from a different, different lens. I had written down to ask if the North Star Promise funding was part of the OHE state examinations, but you addressed that before we got there, so thank you for that. But thinking about, especially at the Minnesota State Legislature right now, where for some, the issues of fraud and all those conversations, not about the University of Minnesota, but about, state departments are clearly top of mind for a large part of the legislature. I think it's important as part of our legislative strategy to talk about this work. I started to connect those dots when you were talking about the OHE state examination part of the engagement here, but thinking about the work more broadly, it would be great to see that as part of our strategy. I remember being in a hearing in the last year or so, or 2 years, when Min State, as part of the kind of intro to session, when the institutions come and do the overview and beginning hearings, I remember a section that Min State had about their audit work. They actually had the trustee that was the chair of the audit committee be part of that hearing. I remember it because it was unique and not something I'd seen us do before. And I've always thought that we should do something like that. Now it all ties together for me in this presentation about why that would be valuable. And so I don't know if someone can pass that along to the GR folks, and I certainly can as well. But I think particularly this year, with all this great work and the engagement that we do here with CLA, I think it would be worth having this as part of our narrative this year in a way that supports what we're doing at the state. So thank you for your work.
Well, thank you guys for this presentation and bringing us up to speed with all the changes that are happening and really just how can we be in the preventative space. I know when we do have an opportunity to present to the legislature, I think to Regent Farnsworth's point, if we can really talk about the preventative work that we're doing, right? Just so that we're not in the space of being on the back end questioned around what work have we done here? What have we actually uncovered? And to that note, wondering as we're planning for fiscal year 2026, you did give us that snapshot of, the various different engagements and areas that you all will be focusing on in the next coming months. I do wonder though, and this could be a CLA or even a management question, what areas do we see potential risks, right? Where are we predicting risks rising up, whether it's pre-existing risks that we're aware of or areas that we think are emerging just due to the federal landscape shifts that we're seeing, but also just shifts that we're seeing economically and across the enterprise. I can start. Chair Verhalen, Regent Mohammed, members of the committee. From what we're seeing, we are certainly seeing additional administrative burden from different agencies in regards to the level of supporting documentation that we have to submit. And so I think that's something that we've been in active discussion about in regards to the fact that we do have audits that we complete, where it's looking at whether or not our costs that we're recognizing are allowable. And I think there's definitely some room there for us to have some discussion about how we can lean into some of that compliance work that we already do, rather than having to do this more administrative heavy manual work that we're doing currently.
Yeah, you did it very well there, Molly, but Chair Verhalen, Regent Mohammed, and the rest of the committee, I would say from an auditor's perspective, there's always industry-wide risks that we're looking at. Tuition collection, your tuition payroll, that's a big one that we spend some time in. General disbursements, we want to make sure there's internal controls over your processes to make sure there's limiting access to misappropriation of assets. Well, but on the horizon, things that we've been looking at is exactly what Molly has said. Collection of these federal monies. Are there receivables on your books that you're not actually going to receive because for some reason the federal government has pulled those? Are they allowable costs? Ensuring that if a project has been rewritten for some reason, that the costs being pushed through to these federal programs are allowable. So those are just some of the risks. Of course, we're just now entering into our risk assessment process here at the university. We pay very close attention to the national landscape, but we also want to hear from you, from management, of what's going on at the university so that we'll build that risk assessment once again.
All right. Thank you.
All right, thank you guys for
Real this time. Our second item is an update on internal audit activities and results since the October meeting. Chief Auditor Goldsmith.
Yeah, thank you, Chair Halen and members of the committee. Internal audit update begins on page 166 of your document materials. As a reminder to the committee, this is a regular update on internal audit's work from the last 4 months. To begin with the internal audit summary on page 167, I want to highlight that there are two Tier 2 audits that we intend to defer from the FY26 audit plan, the College of Science and Engineering IT audit and the UMD advising audit. This is fewer deferrals than we thought may happen at our October meeting due to the impacts of the Minnesota Paid Family and Medical Leave Program. However, since the October meeting, our office has lost 3 auditors. Our senior data analyst, one of our 2 IT auditors, and our associate audit director who oversaw our system campus audits. This is in addition to some expansion of employee medical leaves and one expected retirement in the beginning of June. So we still expect to complete or make substantial progress on all FY26 Tier 1 audits and the other Tier 2 audits on the plan. We've also recently posted an IT auditor position and are in the process of posting a financial auditor position as well. I will continue to inform the committee of any other changes to our audit plan as they may happen. Follow-up results on outstanding high-risk audit report issues this period is detailed on page 169 of your docket. Overall remediation was 28%, which is higher than last period, but is still less than the normal period. However, only 30% of the open items are past management's expected implementation date, and 69% of the items have been open for less than a year. I still believe the administration is putting significant effort into addressing these risks. However, given the large number of items currently open and the amount of work some of these items will take to remediate, I've communicated to the administration that sustained attention and support will be needed to ensure lower remediation results don't become a trend. There are 2 audits with high-risk items that have been open for over 2 years. Those are detailed on page 170 of your docket. The Bell Museum, the first one, which still has an item open related to completing an inventory and valuation of their collection. These efforts continue to be delayed in part by facility-related issues that facilities management is now working with them to address. The second audit is UMD Athletics, which worked through a substantial number of issues, including several IT issues, but is still working with information security to complete a vendor assessment for one remaining vendor-hosted application. We also have 8 audits that remediated all remaining high-risk items. They're on, again, page 169. They're the ones that have the 100% noted next to them. Just real quickly to rattle them off, we always want to make sure that we give them a shout out because a tremendous amount of work goes into remediating these issues. There was University Health, Safety, and Dentistry, which both had some long-term issues that they were working on related to establishing a new safety training program for the institution and some accounts receivable issues. There's OIT Server Administration, Parking and Transportation Services, Biomedical Engineering, CEHD on the Twin Cities campus, College of Design, and Athletics, Drug Testing, and NCAA Board of Governors Policy and Campus Sexual Violence all completed their remaining high-risk items. The audit activity report on page 171 shows a summary of our work we performed over the last 4 months. This includes information on our assurance activities, investigations, advisory services, including the formal committees that we serve on, and other activities. We completed 7 audits this period, whose results are summarized on pages 173 through 179 of your docket. One of these audits was a transition review of the VP of IT and CIO to the interim CIO, where no issues were identified. The other 6 audits completed were our standard audits. 3 were rated as good, our top level rating. 2 were rated as adequate, and 1 had a rating of needs improvement. The audits that were rated as adequate are UMD Rec Sports Outdoors Program, where we found many key controls are in place, but IT controls need improvement, as well as we recommend that they work with the university's health and safety department to review their controls related to safety risk. Just by the nature of their programs, there's just a high level of inherent risk, and so we believe that some additional attention is needed there. The other audit rated as adequate is mechanical engineering, where we similarly found key controls in place, but a need for additional oversight, especially related to student group expenditures and sponsored award administration and reporting. The audit with the needs improvement rating is University Services IT. University Services is in the process of consolidating many disparate IT processes into one group, And while we have confidence in both the management and the direction of this effort, many key control processes still need to be strengthened and standardized, as well as some additional improvements into their IT governance and determining who is doing what portions of the IT work now that they're moving through this process. The last item to highlight in your docket is the remediation plans referencing peak on page 180. As requested by the committee, this schedule shows all audit reports, management action plans that reference peak to address issues identified. There was one new item added to the schedule this period identified in the psychology audit, where psychology is working with OHR to address some payroll issues that occurred during the shift of responsibilities to the peak model. This concludes my remarks, and I stand for any questions you may have. All right.
Thank you very much. That brings us to the information items. Chief Auditor Galswick.
Yes, thank you, Chair Verhalen. There are two information items today related to engagements with external auditing firms, which are required to be reported to the committee by board operations and agenda guidelines. One engagement was with the university's external auditor, Clifton Larson Allen, for agreed upon procedures performed associated with the university's retirement plans. The other engagement was with Baker Tilly Virchow Kraus, who provided consulting related to energy projects that may be eligible for federal renewable energy tax credits. Neither of these engagements pose an independence issue. That concludes my remarks, and I, or Controller Viola, who's in attendance, are available for any questions you may have on this.
Questions?
All right,
Thank you.
take it.
There being no other business before the committee, we stand adjourned. Thank you, everyone.